Welcome back, everyone. I'm super excited today because we have a very special guest joining the show. Stan, thank you so much for taking the time.
Always a pleasure, Chris, and you're doing a great job. So it's a great honor for me to be able to participate in one of your podcasts.
First question is a fairly simple one, but I want to start there. First memory of finance, and was it love at first sight?
Oh my God, are we going down that? You know how old I am, right? We're talking about, theoretically, we need to go to the archives of the Danish national history books to find the early parts of that question. No, to be honest, the my story is pretty simple. My uncle, Ole Jakobsen, was and remains one of the single biggest foreign exchange traders ever in the history of Danish banking. He ran forex trading through many years, what it was called used to be called arbitrage at the time, in the Danske Bank from the 1970s until the late 1980s, 90s, sorry. So one day I was supposed to meet my uncle at his work, and I walked into this massive trading floor, a little bit like the Wall Street movies, phones everywhere, brokers, 50-55 taken, mine, yours, and all that shit. So I said, you know what? I was at the time about to enter university. I said, screw all this university stuff. I just want to be right here, right now. And since then, it's just history.
Amazing. Talking about the archives, if you look back on some of your most important decisions, let's say in your 20s or when you studied, is there anything we can highlight there that you feel set you up to give you a great platform?
No, and I know you wanted to go this route, but I have to say I don't feel successful, and I'm certainly not someone that anyone should try to copy in any shape or form. But for me, it was a random walk, as I said. To some extent, I came into this business, but maybe if I may just extend your question to say what keeps me in the market at this high age, probably, right? I think this is the most fascinating game is wrong because that this sort of demeans the what is going on. I think this is the most difficult exercise in the world, maybe except for predicting the weather. And I think every time I'm just about to understand the rules of the games, they change the rules on me. So something else pops up. I need to be, going on and researching something else. So for me, this quest for understanding, the quest for information means that if I go to the hairdresser, I read every single women's magazine. If I go to my another to SAS's lobby at Fornebu, I read all the magazine. I'm always looking for that, just that one tiny bit of information that can give me the ability to understand the world better. So I love that, and I think I've always entirely been driven by my thirst for information and for understanding, and I think to that extent, I'm living up to what I try to teach my children, which is that just follow your heart. Screw what dad thinks. Screw what your peer group thinks you should do. You have to do what you want to do simply because your stamina and your CPU is much better used to something you really like. And now I'm at an age where a lot of my colleagues are starting to consider, let me put it that way, to retire. I have no concept of the idea of retiring. I'm going to be trading and analyzing till I die, which hopefully is going to be far away. So I expect to be around for another 30, 35 years, Chris. Even when you get grandchildren, I will still be trading if I have anything to say in that matter.
Incredible. Let's talk about macro. Why are you so interested in that aspect? I mean, you're probably interested in everything related to finance, but still you like to have this overview and go from there. Can you just explain how you ended up there? Was it randomness that as well, or is it something that you feel there is a specific reason for being so focused on that?
No, so I think that like an operational process or education, you start in preschool where you learn to interact with other children. Then you start to learn the letters. Then all of a sudden you can read. Then you finance that, and you figure out that by the time you get to 7th, 8th, 9th grade, I'm very good at math. I'm very good at history. I like to write. I don't like to write. So I think as you work through life cycles, I think you're refining what you're good at. I've never had a real job. I've always been in banking. I've had the opportunity to work in the US. I had the opportunity to move in the UK to work even in Norway. I even done that. So for me, it's you're refining your skills, and ultimately, I'm not very good at anything really, except maybe for one thing. I am relatively okay to take a huge amount of information and then almost immediately know what is important relatively to what is going on in the world. So my skill is exactly that macro overview skill, knowing that women's magazine I read about some new behavioral science that is the reason why women buy XYZ. All of a sudden I can adapt that to longevity studies, which by the way have potential upside of 25%. So that's the really, to be brutally honest, and I know everyone is always trying to be humble, but I'm really only good at one thing, and that is taking a huge amount of information, which is, as you defined it yourself, really about being a macro guy with a big overview. So my business today is to try to put probabilities on the future, never ever trying to convince you or my clients or anyone that I advise on what I think is right, but I'm always trying to say, okay, this winter I think there is an 80% probability we have an energy crisis. Last year, the year before last, we said, you know what? Probability of green transformation becoming the major issue is large, because it came immediately after me traveling around the world this time of year, 3 weeks globally, and everywhere I touched down, there was forest fires, there was flooding, there was some nature phenomenon that dictated to me as a person, as an individual, but also as an investor, there will be ramification, there will be consequences. And I went back straight from that trip and said, you know what? In 2021, the focus is going to be green transformation. So, your willingness to be open, your willingness to be wrong, and at all time being thirsty on understanding things is really macro to me. But having said that, the breed of all classic macro guys like me, it's a very, very small group of people today, because of course we have been replaced by a text algorithm that analyzes whether data are good or bad. But fortunately, I think to some extent, I think macro is coming back. I think the next 10 years in the market for you and everyone else will be the most interesting ever, because we are at a place in history, at a place in terms of the inequalities defined as a large spectrum, is the biggest ever. And there will be repercussions, there will be pushbacks, there will be new initiatives being made. And I think at the center of this sits something which is very dear to Norway, of course, sits the energy and the energy prices and that whole conversation.
Quarter is the new way of doing company research. Their first mission is to enable access to conference calls, investor presentations, transcripts, and earnings reports. Their second mission is to create a completely new way for companies to reach their investors and vice versa. Quarter is 100% free. They include companies from 15 markets today and plan to add more. They prioritize requested companies, and users can now leave reactions while listening to the conference calls. So make sure to follow them on Twitter at Quarter App. And I think that's a perfect segue to the next concept I would like to talk about. And I know you have some very good thoughts on this and a good way of explaining it. So for people who aren't that into finance, can we explain them the concept of the physical world and the financial markets and how they play together and how we can connect the dots? Because it's seems to become more complicated to understand that relationship.
Yeah, because there isn't any relationship, which is really the complicated factor here, is that if you go to university or you go to business school, you would expect that there is a consequence of monetary policy, of issuing excessive amount of debt, that the physical world is a constraint on the real world, on the financial world. But I think the best way to explain it is that we, as you rightly say, let's just push back. What I think and what's been my driver of my research the last 2 years is that we are saying that the physical world is too small for the political aspiration and narrative of the policymakers. What we mean by that is that you cannot push, as you do in Norway, to drive electric vehicles and then at the same time run an ESG program on mining and fossil and metals and batteries. That makes zero sense. And just for the record, if I really need to upset all you Norwegians here, it makes zero difference to the world whether 100% of Norwegians drive an electric vehicle or not, relatively to the issue that we globally are addressing, which is CO2 emission, while you are buying more and more subsidized electric vehicles, what is happening over in China is that they consume 30%, 30% of global electricity, which they produce 70% of by using coal burning. On top of that, it's even worse in India and in Russia. So if you in Norway want to do something that changes the CO2 emission, you should invest and you should have used, and this again, going after my favorite people in the world, the Norwegians here, you should have used all that money to fund and chair the biggest professorship in alternative energy, in fusion energy, in small nuclear reactors, and to some extent, the Oslo Stock Exchange, to be fair, is trying to be that intermediate function. But you left 20, 30 years on the table where you could have played a major role. You buy electric vehicles, no difference to the world. Maybe for your conscience and Godspeed on that for the Norwegians, but that physical world versus the practicality of what goes on needs to be respected. And it's actually one of our outrageous calls this year that we're saying there will be a rain check on the fossil energy sector. What we mean by that is that we fully buy into the concept of electric vehicles. We fully buy into the concept of renewable energy, but it is not the solution. It is part of the solution. It is not the solution. The solution is to build a tangible, implementable infrastructure rollout, and at the same time, simultaneously investing into something like the Manhattan Project equivalent of finding marginal cost of energy with a cost of zero and an emission at zero. That is what will change the world. And that disconnect is something I love as that macro guy you were asking after. I love that disconnect, not because it's an issue, but because it's solvable. It actually, we only need to address the real issue, the real elephant in the room, and we can address that. But the physical world right now is that the more electric vehicles you buy, the more you are carbonized, you're metallizing the world. So basically, when you decarbonize the world, you're metallizing the world. On top of that, you create, because of ESG constraints, you create a inelasticity in supply from the mining and the fossil energy sector, because the cost of capital is through the roof, 15-20% if you can raise capital at all. You cannot do greenfielding, you cannot do brownfielding, and even the board members on these fossil energy companies and the mining companies, they are livid afraid of being sued by investors, by regulators, by private citizen groups and others, because they are in a pollutive business. The fact is that everything you do today, Chris, everything your family do today has huge amount of electricity consumption, which, by the way, doesn't come out naturally just because you switch on a switch, but actually needs to be generated in most cases by a stable flow velocity-wise of a turbine that generates this energy, i.e. renewable energy is independent, is not to be used in this grid net. So we're building out electric vehicles without having the grid network to do it. And I think famously in Norway, if you go to Hytte on a weekend, you can find one charger that is doing it fast, and there's a queue of like 30 kilometers to get to that one. That just shows you my physical world versus the aspiration of where we want to be. And I think that's been a critical way to think about the world. And it is going back to the education part of these items. So what is happening right now is that these two worlds, the political financial world, which is driven entirely by talking, is now meeting a reality of people who practically need to deliver these services. The logistic companies, the global supply chains are getting far more complex, which means you need more scale, you need to be in more countries, you need better computer system. So the marginal cost of operating infrastructure system is getting more expensive. Meanwhile, we keep dreaming that we can all just get electricity for free. So what is happening is that the reality of the constraints in the physical world is now creating a bridge to the financial world, and that means, in my opinion, and only in my opinion, that the financial world need to reprice the cost of energy, the price of mining products higher, and relatively reduce the price of something like platform companies and Teslas and others.
You came with fire today, Stan. I love it. And I think it's spot on, because we had the Hugo de Stoop from Euronav on recently, and he had the same point. Like, he's trying to make the tanker company green, but suddenly you can't get financing on the same level as others. So he's saying, do you think it's going to be easier for that transition or harder? Maybe that just emphasizes your point, but I thought you talked a bit about the report, and we're going to talk a lot about that today, but maybe just start off with, what do you think is the hardest part to predict in finance in general? Is there anything that is super complicated to predict, or is it just a whole spectrum that is kind of hard to predict?
Reversing the question, saying what's the easiest part is predict central banks and governments. They're always going to decrease the price of money. They are willing to live with unintended consequences in terms of inequality and the likes, despite perfect academic evidence that is wrong. What is very difficult to predict is energy. I think, and energy to me is the single biggest impulse and input to an economic predictive model. Because there's such a big swing factors. Most recession starts with an energy crisis. Most boom cycle starts with very low energy. And I think to a large extent, energy drives the price of money, not price of money driving energy. But of course, now, as we just talked about, there's of course a feedback loop, as this gentleman was also alluding to, that the marginal cost of energy and mining is increasing because of limitation from regulative and ESG concerns. But I, to be honest, nothing is easy to predict. I can't even predict my wife's purchasing power and spend. So I don't think the way to approach the predictive question is to assume that you can predict anything. You can look for policy response into a context of history. And again, I think our game, your game, anyone who wants to be educated in this needs to think like a bookmaker. What is the probability? What's the long shot? What is the even odds of what goes on? And then you say, and I think Torres says this the best. He says the deals or the trade you need to do is not every single trade that you think has momentum or intrinsic value. The best trades to make is when there is a massive gap between the perception of the value and the reality of the value. So, we use just now the ESG lobby, which is growing at 35% a year in terms of asset under management. That doesn't ring any. I mean, that's a huge gap between perception and reality. There isn't something called ESG. It's a label. It's a very good initiative, and ultimately would be a good thing. But most companies can be E, S, or G. That can't be ESG, as your shipping man was trying to indicate. So for me, the gap between perception and reality is the trade that you need to find as a macro guy, but also as a politically and socially conscious persons. I think the biggest gap in history is the gap there is in age between you and me right now. The spread between poor and rich is closing in because of the subsidy that we do and the good work we're trying to do with the lower income brackets. But the ability of young people to catch on to the revenue stream that we baby boomers has been given is very limited, and that sets up immediately the reason why blockchain and NFTs and of course cryptocurrency overall becomes attractive, because the young people, and I assume to some extent, are not giving you words in your mouth that you don't stand by, but I think young people feels that this crypto blockchain space is somewhere where you can catch on to that wealth that we have generated for ourselves, which pretty much has been driven by ever lower interest rate and lower inflation. So from that perspective, I think that's how the story really evolves.
Super interesting. Let's just make a proper introduction to the report you just released, because what I love about these types of reports, it's not so much do I think this scenario will be true, but it gives you a framework to work from. So if you clearly understand these scenarios, and I'm guessing a lot of people right now dealing with COVID the last years who didn't have the right insurance would have loved to have this report 2 years before, right? So talk a bit about why you make the report, do you enjoy it? What's been the most learningful about creating those types of reports that should make people think about stuff?
Yes. So as I think we addressed a few times already, most thinking is linear. It's like yesterday looks a lot like what we expect tomorrow to look like. And that is fine for everyday needs. But if you are a board looking 10 years into the horizon, you're a central bank looking at downside risk or systemic risk, you need to create a framework where you look at events which have a small, 5 to 10%, 15% likelihood, but if they do happen, have a significant impact in terms of what happens. And that's been the basis of this report, which I initiated 20 years ago. First time with 8 journalists in a restaurant, a seafood restaurant in Copenhagen. Now it's a global entity. Today alone, I've done 10 interviews with this. I've been Bloomberg, CNBC, CNA, Singapore TV, BBC TV. All of this is now globally. Why does it have an appeal? Exactly because, as you say, people are starting to understand this is not about us telling you what will happen. It's about us telling you this year there is a hypersonic global race going on. We are telling you that it is very likely inside the next couple of years that we will be having an ability to live on average 25 years longer. We think that women will rise to the occasion and finally claim their spot in terms of not only wages, but also the amount of people in C-suites and boards. We think that the inflation in the US could go to 15%. We think that India and the GCC countries can create a new strategic alliance underneath the umbrella that globalization is breaking down. So why are we doing this? We're doing this because this is not something people want to discuss unless you take the format out of today's world, out of today's decision, and say, okay, Chris, why don't we have a conversation about what may not or may not happen? There has no consequences. It is just me trying to do the opposite of numbing your brain. I'm trying to activate your brain cells and saying, tell me why I'm wrong. I mean, I'm really through this publication, we're trying to challenge people to tell us why we are wrong. And what turns out to be the case is that people get as animated and involved as I am right now talking to you, Chris, because it's just super interesting. It is really the most fun. I mean, if you go to a dinner conversation, do you want to hang out with all your friends that all supports Tromsø FC, or do you want to go to someone that says, listen, Tromsø is okay, it's a shitty place with a shitty stadium, but I really think that Stavanger, whatever they're called in Stavanger, is a better team. You want the conversation, and you want respectfully be able to express your view. And every time I engage in these dinner conversations, client conversation, I never walk away from any meeting where I'm not 1, 2, 3% more informed. I may not be smarter, but I'm more informed, and I have a better balance in my own view of the world. That's what we're trying to achieve.
Couldn't agree more. Let's just dive into one topic.
The Tromsø part you agreed on, yeah?
Your research is amazing. I was like, it's the first time any guest have managed to figure that out. But let's talk about inflation. Just because I saw the president of the European Central Bank today say that we know you guys are worried about inflation, but it will decline in 2022. So it seems like the perfect quote to take the report and the comments made in the report and pair that up with Christine Lagarde's comments today.
There is nowhere in the world where the gap between perception and reality is wider than with Miss Lagarde. She is, by any standard deviation, the most incompetent central banker ever in history. And she runs a group of people who, just across the border in Poland, Czech, and in Hungary, is seeing central banks hiking interest rate 100, 200, 300 basis point. You have a country like Poland having runaway inflation. Poland is the second most populous country, as far as I know, in Europe. They are in total denial, so much so that one of the outrageous calls should have been that the ECB hikes interest rate 2 or 3 times next year. New German government comes in. They are instituting a green policy. They're closing down the Nord Stream 2. Energy prices go through the roof. ECB is forced to hike. She will be forced to hike anytime next year. And she's just a classic example of what we should not try to achieve. I mean, I know we call the viewers don't know that, but the theme right this year is revolution. And Thomas Jefferson, the former American president, famously once said, you need a revolution every 20 years to keep the government honest. I'll say you need a revolution every 5 years to keep the central banks honest. They are the most incompetent bunch I've ever seen in my over 30 years. They are living the pipe dream, despite the fact her colleagues across in the US, her colleagues in the UK, her colleagues the rest of the world now are fully submitting to the fact that we have a inflation which is sticky.
What's the end game here? Is it impossible to predict, or do you see any milestones that could happen next year?
No, I mean, when you get as old as I am, you tend to feel that you think you are smarter in terms of the amount of information you have, but you also know you know less about what will transpire into the future, because your question really raises the mathematical decision tree, right? Because it's all path dependent. So let's say just run through one or two of these paths. If I'm right about the energy crisis this year, the winter being very cold, then you have an inflation pressure that means almost, by definition, they will have to hike rates. If you have a very mild winter, if you have the fact that they're similar to what's happened to coal prices in China, you're able to contain it. You have fiscal push all of a sudden being agreed. Then you have consumer spending going on. So you can see, you can easily arrive at a conclusion, but again, similar to our conversation about green transformation, how you get there is far more important for you as a trader, as an investor, than the end goal. Even if I told you right now, Chris, what Fed 10-year US interest rate was going to be at the end of 2022, it wouldn't give you any ability to actually do anything. Because is it where it is because the inflation has gone up, or is it because nominal growth is going up, real growth is going up, or is it because the wages are going up? You don't know what the composition of the number is, despite the fact, every single day people are just sitting there, watching what is 10 years doing, what's the NASDAQ doing, and the likes. So there's too many paths that we can travel to get to that road. And that is exactly why you put probability to it instead.
Makes sense. We need to discuss crypto a bit, but can we just start, before we dive into crypto, just explain why fiat system is a belief system at the start? Because if we understand that concept, it's easier to take that concept over to crypto again.
I don't think you need to do that, but I'm happy to entertain that question. Fiat money is basically that, when you have a Norwegian 100 kroner note in your hand, you are fiat, to be believed. Fiat means to be believed in Latin. So to be believed that you will actually get 100 kroner worth of value from using and owning that note. What it's really built on is essentially that the Norwegian government is able to tax someone enough money to create a proceed that undermines that money. But it's a fate system. I don't know, you probably know this, but it's not a trick question. But you know what it says on a $1 note in the US?
Something with God, believe, or something religious?
In God we trust, and that's all the fiat you get. So I hope you are a God-fearing person. No disrespect to people who believe in God, but you really need to believe in God if you believe in money, transaction money, physical money. You need to believe in God, because the government's certainly not going to be gods if they don't want to live up to that obligation. So that's the fiat money. It's a belief system built on the fact that government ultimately can tax people in a country to sustain the value to a large extent of the value and the 100 Norwegian kroner note that we talk about here.
Your first initial thoughts on the white paper by Satoshi, was it garbage, never mind, or was it, okay, this is interesting, I need to learn more?
One, I don't understand what the hell this guy is on about. Two, I still don't understand what the guy is talking about. Three, why is this interesting? Four, how come that I don't understand this? Am I not smart enough? And then fifth, sixth, and seventh, starting to talk to people in the industry, I realized that this, and to be honest, I met, and as you probably know, Chris, I'm being invited on a number of occasions to talk to people in as a presenter. One of my early engagement with people around this paper was a group of people who came from crypto group in Denmark. I never met a more odd bunch of people in my life. So the initial scare for me was that these types, not that I'm discriminate about anyone. I mean, I think there's a good story from anyone in society, including homeless and unemployed and employed and directors. I all think they have a story to tell, but they were very much anti-democracy, anti-establishment, anti-fiat, as you alluded to at the beginning. But then, of course, over the last maybe 17 the first peak, but now over the last 2 to 3 years, it's become far more a conversation about an asset class. What people don't realize, and I had the pleasure of interviewing actually Katie Woods, which you may know from ARK Investment. Peter Garnery, my equity analyst, and I spent an hour with her, and she made a very, very good argument on the crypto space, not on the value of it. But she said, crypto and the whole new emergence of payment system is really based on that it's a new asset class. In the 1970s, pension funds didn't buy real estate. That was not perceived to be an asset. So in the 70s, the pension system and family offices introduced real estate. In the 80s, they introduced hedge funds. In the 90s, they introduced private equity. In the 2000s, they have venture capital and early parts of the technology, and then of course now all of a sudden it's becoming embedded as an asset class. And I think she's right, because we are always as investors looking for instruments which have a diversification relatively to risk on, risk off. And to that extent, I became a convertee a couple of years ago, and in my own advisory portfolio called the 100-year portfolio, I actually have 7% in crypto, which is then being rebalanced every month, which is the way the model worked. But for me, it's been a very long road. And to be honest, if you wake me up at 3 at night, I still can't really explain to you what goes on. But I will say, if you allow me to dwell into one of the outrageous calls we have this year. So this year, the young crypto analyst that got working for me came up with the idea that NFT, non-fungible tokens, could create the single biggest user case for blockchain ever. I think the technical issue, the commercial issue with the crypto space and blockchain has been, what is the user case? I mean, it should be elections, it should be internal pricing, it should be taxes, it should be a lot of things, but it's never really taking off the ground because the user cases are too small. But now comes the music industry with all the millions, if not billions, of followers, and you build an NFT platform that it sits on top of a blockchain, and all of a sudden you're moving not 1,000 or 2,000 people onto a blockchain, you're moving millions. Katy Perry is now out and moving all of her interaction with her fans onto a blockchain. And if you see the pricing model going on in music industry, 90% of the money is retained by Spotify's and services like Spotify and the music record label companies. So the musicians wants to look for a model that gives them back the power. The fans doesn't really care whether the app is Spotify or through intermediation at blockchain. But the difference for the industry is that you're creating a commercially viable blockchain. And bottom line is that we potentially are creating through these NFTs, mainly right now in art and in music, the user case, which is going to be the building blocks potentially for blockchain. And then all of a sudden we move from the speculative wishing fiat money, anti-government and everything else to actually having something which is usable. And then ultimately, of course, we need this intersection with the fiat money to be the final leg. But if you can create the commercial case for this, I think the asset class issue is already addressed. If you're a fund manager today and you don't have exposure to crypto, you are underperforming by definition. So if you're in a relative performance business, you're underperforming. But now I also think there is an increased probability that we see a commercialization of this sector. And having said that, I have to say that the rule in Saxo is that if we do write and do research on crypto, it cannot be read or issued by anyone who's over the age of 30. So I'm obviously almost twice that age, so I'm disqualified for actually having an opinion on this.
I totally agree, and I find it very, very interesting. So I just want to add to that argument, because you have the same dynamics in gaming, which is famously called play-to-earn model. So obviously when people playing a game, if they can do it on a blockchain and get the rewards themselves, it seems like a better business model than that one company who creates the game get all the revenue. So I think we have the same dynamics in gaming right now. Just talking a bit about Bitcoin, just a final thought, because it also, to me at least, it introduced a concept, and I think it was Mark Yusko who was like famously or have been pounding this all the time, that you have this innovation in the asset class, but also that you shouldn't misunderstand volatility. That volatility is actually a great thing, and you're also talking about this volatility aspect. Can you just quickly explain that framework as well, so people understand that volatility is necessarily a bad thing in a well-managed portfolio.
Exactly, and that is actually the crux. That is what creates my model. So, if I were to do, and I can actually save you 5 years in university and asset allocation during the next 2 minutes, because the rule in investment is the following: 90% of your return comes from the initial allocation into asset classes. So it's far more important how much equity, how much crypto, how much fixed income, how much volatility, how much commodity you have than it is what you put into them. So you will say, oh, I'm Christopher, I know everything about the Norwegian energy market, so I want to put a lot of it in. And I go like, you know what, Chris, be my guest, go ahead, because over 10 years, it doesn't really matter. You can buy MSCI World, you can buy the US. So it is number one rule, and this is academically and practically proved. 90% of your return comes from your asset allocation. Inside that asset allocation, of course, then you need to get two things. You need to get a accrual. You need to get a dividend yield, a return on your money, which is the bread. The sort of is in a bread and butter situation is the bread, and then you need the butter to be the additional. And there you need volatility. You need it in two ways. You need to have protection, long volatility against your risk on. But in the case of crypto, why is volatility good? Because if you have a model that is rebalanced once a month or once a quarter, you will always have exactly the same percentage exposure to crypto. So let's use my model, 7% in crypto. I'm 57 years old. It sounds crazy. But listen, I don't care it's 100%, because what happens is that if crypto during 1 month goes up by 100%, then my weight goes from 7 to 14, right? What will happen at the end of the month is that I'm selling 7% down to 7% again. So as the market goes up, I'm selling. As the market goes down, I'm buying. And the ability actually to have a wide range or just the market trading in a progressively slightly higher curve means that my net return over time, my buying price is always the average price, and I'm always selling at the high and I'm buying at the low relative to that average price. So through simple, no view on the market, but just using an allocation model, rebalancing that a month, the 100% became all of a sudden becomes an advantage, because that means you have an exposure which can net contribute in alpha terms to your overall risk. Because, as I said to you, in my case, I have 35% in equity. That is not going to, whether I buy Norway, Denmark, or MSCI, whatever, for 1 year, it's going to be, big discrepancy. But over 10 years, which I expect to minimum live here, then it's not going to make a major issue. But having a 25% right now volatility in equity, 100% in crypto, weighted correctly, 35 versus 7, and then rebalance means that all I ever do, despite having opinions about everything, I really fully understand that I have no predictive power, and I'm not ever going to listen to myself in terms of allocation. I'm just going to use my allocation model that sits on top of it, which is doing perfectly fine to keep me in the game.
What's the one idea you have in mind that was too wild to put in this report? I can help you with some suggestions, but I guess you have some things that maybe it's not political correct to say, maybe it's too out there, maybe on a risk-adjusted basis, it really doesn't fit this report. Because I guess you have like a workshop trying different concepts, so you need to have someone. Do you come up with someone that is just saying, "Now, Stan, this is too wild. You can't put it in here."
I'll tell you a funny anecdotal story. So back in 2007, 2008, you may remember that Iceland was the hot topic. All these entrepreneurs was buying football clubs in England. They're buying everything in Denmark, and I'm sure in Norway as well. And one of my analysts came out with a call that Iceland would default, which was a very strong call at the time. And it meant that the prime minister of Iceland called the CEO of the bank and complained. And let it be known that we, of course, was right. So you can get into trouble doing what we do here in terms of calling the outrageous calls. But for me, I think we already have one which politically is very outrageous, and that is this constitutional crisis potentially emerging at the back end of a midterm election. So, what we're saying there is that the discrepancies in in interpretation of the result that we saw during Biden versus Trump. Imagine we have a tight midterm election. You can have single states who wants to do cessation. You can have people not wanting to recognize it, and we get into a state of chaos. I think for the world, at a time where the US is backtracking on its global policeman job, I think that would be detrimental. Uh, I don't want to, because I'm not a negative person, despite all these outrageous calls. I don't want to talk about wars, but that is evident that can happen. You know where the troops right now are marching on both sides of the borders. You know that, Turkey with Erdogan. You know that, the southern part of Latin America is in big trouble, both politically and practically. But I think the common theme around the world is that, we are trying to solve issues with more debt. We are trying to be in the political space non-accountable. So I think everything is outrageous. And I can tell you, probably closing a long answer to your question here. Yeah, the biggest pushback I actually get on our race prediction today is that they are not outrageous enough. And I think if you look at what we are suggesting this year, it is really outrageous. But what has changed over the last 20 years is that reality today, so the gap between reality and outrageous is the smallest ever. Because a lot of what goes on in the world is so outrageous that even my team would not be able to predict the ability of Erdogan to stay around in Turkey, the inconsequential governments that we see in terms of policy, in terms of weapons race that we've seen with these hypersonic weapons, that all of a sudden it looks, at least from the outside, like China and Russia has an edge on the US despite spending significantly less money. All of these are outrageous calls, but the reality is that is happening and is going on. So the gap between outrageous and reality of life, I think life today is day by day almost outrageous.
I agree, and it was a very thoughtful answer. I had written up like aliens and unlimited gold supply in the solar system, so I'm glad you put it. But I guess it just shows you the world we live in. Just some final questions before we wrap up. Some fun ones. I know you do investments that are besides this portfolio, that you have some investments you make for fun or because you think it's learningful. I think you have said you do some in shipping. Is that correct?
I should probably disclaim that I'm on the board of a Norwegian company, even Flex LNG. Yes.
Exactly. Can you tell us about your fascination for shipping? Has it always been there, or?
Yeah, no, I'm pretty sure if I hadn't been going into that trading floor, I would have been in shipping. For me, it is the most beautiful vehicle business in the world. It is also the biggest amateur business, looking from an economics point of view. The great ship owners who ride every single cyclical peak, the risk-on mandate that is constantly in place with these, especially the ship owners. But that game also is changing dramatically, and that's where my fascination is. As you probably know, Flex LNG has a big fleet of Flex ships. It's run by a very competent team headed by Øystein Kallelev, someone you should definitely get on this call one day. And it's inside the John Ferguson Group overall. So for me, this is a dream come true that they actually even thought of me to join the board and talk a little bit about my expertise as a global manager. But shipping for me has always been the business I wanted to be in. So if I have a next life and I can decide which business I will work in, I'll be somewhat involved in shipping instead of in finance.
It's so funny that you say that, because Øystein is one of the most popular guests on this show. He's been on 3 times, and we're doing a Christmas show in next week, I think. So, I mean, it's a fascinating industry. Just a final question. I mean, we have a lot of young listeners who are either studying or sort of entering finance. And they always ask questions like, do you have advice? And I think it's very hard to give a general advice that suits everyone. But I think it's more important to have some frameworks or some food for thought. And at least if I'm asking you the question, what would you do differently if you started your career over again? I think there's a good case to be made that doing the traditional route shouldn't be the obvious answer today, as it maybe was 20 years ago or 30 years ago, for what I know.
Yeah, I think the big difference between starting out now and when I started was that if you walked into Saxo Bank or any bank, you could really decide on a number of jobs that you wanted to do. You could be a foreign exchange trader, fixed income, commodity trader. You could be a credit trader. You could be a bank manager. You could be whatever. I think in finance, at least today, it's very limited what kind of jobs we have. I have more colleagues in social media than I have in trading. My group and trading is the smallest group. I think we are 2,500 people in Saxo. Less than 50 of us actually do what is used to be trading and research, right? So it's a very small group in a mega, exciting business, but to which, to be honest, I don't understand 90% of, but I'm trying and I'm pretending that I understand it. So I think it's very difficult to navigate and give advice on that. What I will say, however, and this is the way I mentor young people who come to me. So they always, like you say, they come to me and say, Steen, I'm doing this and that education. This is my CV. And the first thing I do is I tear up their CV and I go like, okay, I probably should tell you that in my lifetime, I've met 100 quantum physics PhD professors, whatever, who wanted to have a finance job. But what, Christopher, makes you different with the background you have relative to everybody else? Is it real estate? Is it shipping? Whatever is it that really will drive you where you will work without thinking about how many hours you work? And it sounds a very simplistic question, but it's actually a very complicated question. I have one mentee who's never came back. I mean, he never, so far at least, has not found it. But others said, came back and said, you know what? I really like real estate, and I'm an economist. I'm stuck in a nowhere position. And say, okay, so what we do right now is that you pretend you work for me, and now I want you to be the leading expert in the world on REITs, which is publicly listed real estate companies. So you will write a report every month where you give me your advice. You create a model that encapsulates the cash flow and the attractiveness of this REITs. And of course, the fast forward story here is that 6 months later, Nordea hired him as the leading expert on strategic initiatives on real estate. Right? It wasn't. I didn't do anything. I just asked the question, "What is your interest? What is it you're supposed to do?" So my pointer to everyone out there is that you know you know be very selective, but and even though it's something you don't think is going to work, the art world, or I mean, why shouldn't that work? But I'm just making example here, or specialty brew beers with Danes likes or whatever. Go for it. Go fully for it, because you're going to be the best in what you do. That is always what you should try to achieve. Not the best in the world, but the best that you can be in the version of what you do. Again, I sound like a grandfather here, but it really is down to that, because you're all going to have the same CV. You're all going to have the same things that you did at a business school or at university. What makes you different is how you think and how you act relatively to how you think. That is my advice. Be honest to that process, and engage smart people that you like and trust to give you proper feedback, and feedback which is not based on you are a nice guy, because your generation grew up with parents like me who told you, oh, Christopher, you can do whatever you want, just trying is enough, it's all fine and dandy. I mean, you're going to do well, Chris, I know that, I'm behind you. That's not reality. Reality is there are hundreds of millions of you out there who wants to do the same thing. So make yourself special, but only make you special through what really interests you.
I think that's the perfect ending. And just a final thought to, again, add on your brilliant argument is just that we're playing in a global world today. So it's not like before, if you were like a very exciting young guy in Norway, the world is ready for you. But today you can be outcompeted by anyone, right? So you better
or
be...
alternatively, you can compete with everybody else in the rest of the world, right?
Exactly.
That's the way you need to see it. But at the end of the day, no one gets anywhere if they're not interested. Why do people become good footballers? Because from the age of 5, they play football every day. There's nothing that replaces the willingness to work hard every day. But and if you have to work every day, why not do it with something that you really find super interesting? And don't be afraid of failing. That's actually, any success story is built on a failure early in life, basically.
Perfect ending, Stan. Thank you so much for taking the time to join. It was amazing having you on.
No, my pleasure. It's Christopher. I really like to talk to a younger audience, not because I think I'm smart or anything, but just to take away some of the illusion of how difficult it is. It is not difficult. just apply yourself and be a little humble, and always try to be, doing it with some kind of irony and smile and humor, because that makes it all livable.
Hi everyone, Christopher here again. Just a few things before you leave the show. If you like this episode, it would be great if you could give it a review and also share it with your professional network. If you want to get in touch with me, Twitter is the place. Just go to @ChrisVonheim. You can also find this information in the show notes. Hope to see you tune in to the next episode, and take care.